Hello traders and welcome to Brains with Concept YouTube channel. My name is Mike Mbai and today we are diving into a simple yet powerful trading strategy that is perfect for both beginners and seasoned traders. The best thing about it, no complicated jargons, no overwhelming chart, just simple. Kindly grab your pen and notebook and let's dive in. Okay, this trading strategy is very simple. And just like any other strategy, it has its own set conditions that need to be met before you can be able to take this trade. Now, we are going to use indicators, and the only indicator that we're going to use is the moving average indicator. In addition to that, this strategy is best applied when the market is bullish or when the market is bearish. Basically, what I mean is that this strategy is best used when the market is trending. Each and every time you see the market is giving you this series of higher highs and higher lows. And when the market is giving you this series of lower lows and lower highs, that's the best time to use this trading strategy. Now, in addition to that also, you need to have knowledge about the candlestick pattern and in particular, reversal candlestick patterns. And lastly, but not least, we do trade the pullback. Each and every time, the market will be coming back to our said indicator. Now, the best time frame to use this trading strategy is the 1 hour and the 4 hour time frame. And just like any other strategy, the first thing that we need to ensure is that we need to ensure that our chart is very, very clear. Basically, ensure that you have not drawn any lines, any trend lines, or you have not highlighted any area in the chart. Secondly, now we can start now with adding the indicator. For this indicator, we are going to use the moving average indicator. And as you can see, this is the currency I'm on out JPY. I'm on the out JPY on the 1 hour time frame. So I just want to add my moving average. So here it is. I'm adding the moving average. For the first moving average, we're going to use the 200 moving average. The method is exponential. The method is simple. I can change the color to be color red. And then here it is. This one is the 200 moving average. Now the next indicator that I want to add is a 21 exponential moving average. Let me add it on my chart. Is there one average? And let me change the color so that it will be easier for us to differentiate. It is. Now, how do we generate the buy trades? Generating the buy trades is very simple because what we'll be doing is that we'll be waiting for the market to pull back to the 21 exponential moving average. Now, the first thing that we're going to use is that we're going to use this 20 moving average. And anytime the candlestick are above the 20 moving average, we'll be looking to take buy trades only. And anytime the market is below the 20 moving average, we'll be looking to take set trades only. So, like in this situation, anytime the market is below the 20 moving average, we'll be looking to take set trades only. Now, let's go back. How do I generate the buy signal? Now, how I generate the buy signal is very simple. We'll say that we want to see a situation whereby the market is coming back to the 21 exponential moving average. So, in this example here, you can see that this one is the 20 moving average. Just said anytime the price is above the 20 moving average, you're supposed to look for buy trades only. Also, you want to take a situation whereby the market will pull back to the 21 moving average. Now, once the market pulls back or comes back to the 21 moving average, now we want to have reversal candlestick patterns. Those candlestick patterns that show us that buyers are in control or sellers are in control. Now, for our example here, each and every time you see the price is above the 20 moving average and the price is pulling back or coming back to the 21 moving average, now these are the candlesticks you're supposed to look for. You're supposed to look for our entry criteria, you're supposed to look for the buy signals, you're supposed to look for bullish engulfing, bullish pin bar, and the morning star. Those are the candlesticks to look for that you can put to take your trade. Anytime the price is below the 200 moving average and the price pulls back to the 21 moving average, we'll be looking to look for bearish engulfing, bearish pin bar, and the evening star for our confirmation. Now, how do I take this trade? This strategy, we are going to use it on any time frame. So whether you are a scalper or whether you are a day trader or whether you are a seasoned trader who is a position trader or a swing trader, this strategy is perfect for you because you can use it on any time frame. For our illustration purposes, we'll be using the 1 hour time frame as well as the 4 hour trading time frame. Now, how you generate those signals is that you want to see a situation whereby price is pulling back to the 21 moving average, and the moment the price comes back to the 21 moving average, we look for those candlestick pattern. Like if the market is above the 20 moving average, price pulls back here, we want to look for bullish engulfing, bullish pin bar, or the morning star. For our illustration here, we can see the price did pull back, gave us this bullish engulfing, which could have been our confirmation. Another example is this here. Price did pull back, and around this 21 moving average, it gave us, this was an example of a bullish haram, which would have been our confirmation. Our take profit, once you take your trade, you can put two times your stop loss as your take profit or the next area of resistance. Now, let me show you another example. Let me add another example. Now, this one is another example. We can see here, price is pulling back or coming back to the 21 moving average. And this one, it gave us a bullish engulfing, which would have been our confirmation. Another example is this candlestick here. Price did pull back, came to this 21 exponential moving average, giving us a bullish harami. Now, on the 4 hour time frame, because I also want to show you this strategy is applicable on any time frame, the only thing that we need to see is that we need to see price is above the 20 moving average and the price pulling back. You can see here the price did pull back around this 21 moving average. It gave us a bullish pin bar. This one is another example. Price did pull back, and around this 21 moving average, it gave us a bullish candlestick, or what we call the tower bottom, would have been our confirmation. Price did pull back in this level. It gave us a 21. It gave us a bullish harami, which would have been our confirmation. Now, how do I generate the sell trade? Generating the sell trades is equally very simple, because you want to see a situation whereby price is below the 20 moving average. Let me add another example. Now, how we generate the sell signals is very simple. And so that I'll be able to illustrate better and detailed examples. Here is an example. Like in this example here is on the 4 hour. This one is on the 1 hour time frame. We want to see a situation whereby price is pulling back to the 21 moving average, and around this zone, like in this example here, price did pull back around this zone 21 moving average. It did give us this bearish pin bar, which would have been our confirmation. But I want to show you numerous examples. Okay, here we have perfect examples. We can see here price did pull back around this 21 moving average. It did give us this bearish harami, which could have been our confirmation. Price did pull back again at the 21 moving average. Since the price is below the 20 moving average, at this particular price level, we take our sell trade. Another example is here. Price did pull back to the 21 moving average. Around this 21 moving average, this example, it gave us an evening star, which would have acted as our confirmation. Another example is here. Price did pull back to the 21 moving average. And around this area, it did give us bearish engulfing, which acted as our confirmation. Let me look for more examples. Few more examples. Okay, because of time, we're going to do another video explaining this trading strategy in details, as well as when you have executed our trades. And that's it. A simple yet trading strategy that is using the moving average. Remember, consistency and risk management are key to success. If you found this helpful, don't forget to subscribe and drop comment below. Let's keep this conversation going. See you in the next video.